Bismillahirrahmanirrahim. Good morning, everyone. Assalamualaikum warahmatullahi wabarakatuh. So today we continue with chapter 11, which is financial statement analysis. So we already learned the basic financial statement. So you know that in financial statement, we have 4 types of financial statement. So today we continue with financial statement analysis. So basically using the financial statement that we have, we are going to analyze the company's performance using the financial statement. So there are 4 major financial statement. So in this topic, we touch on the 4 major financial statement, the analysis of the financial ratios. So using the financial ratios, how we are going to analyze the numbers from the ratios, how to compute the financial ratios, and what are the limitation of the ratio itself. Okay, so this we already covered before this. Major financial statement, there are financial position, there are statement of comprehensive income, statement of stockholders equity, and also statement of cash flow. All right, so all these financial statement is available in annual report. So if you want to know the financial statement of a company, you can just look at the annual report of the company. All right, so the first one is balance sheet. The purpose of providing the balance sheet is to provide a summary of the firm's financial position. Balance sheet, also known as statement of financial position. Income statement, also known as statement of comprehensive income, and also statement of profit and loss. All right, so it summarizes the firm's revenue and expenses over a given period of time. Statement of stockholders equity, it shows how much of the firm's earning were retained rather than paid out as the dividend. And statement of cash flow, it reports the impact of the firm's activities on the cash flow over a given period of time. All right, so in cash flow, we know that in cash flow we want to know what are the activities, which activities generate more cash, and which activities are spending lots of cash. Okay, so is it comes from the operating activities, because in cash flow statement we have operating activities, investing activities, as well as financing activities. So from these three activities, which generate more cash and which incur more cash spending. All right. So the purpose of financial statement analysis is to evaluate the current management as well as the performance of the company. All right. So why we want to evaluate the performance of the company? Because we want to do the projection in the future. So what's going to happen in the future? Because we want to, so from the analysis that we calculate, we predict what's going to happen in the future. So there are 5 areas that we can analyze from the financial statement analysis. So the first one is the profitability. Second one is the efficiency of the company. So efficiency, we want to know the effectiveness of the operation as well as the management of the company. The third one is the risk level. All right, basically the solvency level of the company. The fourth one is the liquidity, the ability of the company having cash. All right, and the third one is the market measure. All right, so analysis of the financial ratio actually is an information which comes from the raw numbers. All right, so it's a numbers. So from the numbers itself, we will compare which company is better. So using the ratio. So how to come up with the ratio? We have to calculate it. So ratios will provide a meaningful relationship between the individual values in the financial statement. So each of the items in the financial statement, we able to see the linkages between each of the item. Okay, because we want to come up with specific area of the analysis, which we already discussed before: the profitability, efficiency, debt ratio, debt level, the market, market analysis. So all these 5 areas. So the importance of relative financial ratio, it compare the firm's financial ratio to the other entities. All right. So we want to know the aggregate in the economy, its industry or the industry, and also the major competitors within the industry, as well as the past performance. So using the financial ratio, we can do this kind of analysis. So between the company itself, according to the company, the industry, maybe the company represent the industry, they represent the can be the benchmark of the industry, and then we can compare to another industry. And what about the company to another company? For example, company A and like company B, we can do this kind of comparison. Or we also can compare the company for this year compared to the previous years. So how the performance of the company, is it getting better or is it decreasing in terms of the performance? So if it is decreasing, what area that the company need to improvise? So these are the things that we want to know while we do the financial ratio analysis. Right? Okay, so the comparison to the aggregate economy for most firms are influenced by economic expansion and contractions in the business cycle. Analysis helps you to estimate the future performance of the firm during the subsequent business cycle. So that is the first one, comparison to the aggregate economy. Second is comparison to the industry. So it is most popular comparison. So different industry affect the firm within them differently, but relationship is always significant. The industry effect is strongest for industry with the homogeneous product. So industry average may not be representative. So a select subset of competitors can compare to using cross-sectional analysis, or it construct a composite industry average from the industry. Industry is the firms operate in. So basically, how it affect the industry lah. How we want to compare between the company from one industry to another industry. So what a company A, for example, it comes from manufacturing industry, and then we compare to second company which it comes from the retail industry. So what are the difference? So these two company can represent their industry. So for example, during this time, the current situation, what happened to the manufacturing companies? Okay, and what happened to the retail industry? So which perform better? So this kind of comparison we can do using financial statement analysis. So comparison to its historical records. So using the same calculation, so we can compare from years to years comparison of the company. Right, so computation of financial ratio is based on the area that we want to analyze. The first one is liquidity ratio. Liquidity ratio is the ability to convert all their asset into cash. So basically the availability of cash of the company. So that one is liquidity ratio. Liquidity ratio is very important because we want to know the cash level of the company. Is a company is effective in managing their cash? Yes, do you have any question? Yes, you can ask me whenever you want to ask. You can use chat box if you're not able to talk. So that one is liquidity ratio. Second is activity ratio. Activity ratio, we want to know the effectiveness and the efficiency of the company's management. Is the company is effective in producing, in managing their inventory? Is the company is effective to get cash from their client? So all these operation, we will calculate it using the activity ratio. We will analyze it using activity ratio. So activity ratio basically will inform us how effective and how efficient the company's management. The third one is debt ratio. So what is the purpose of calculating debt ratio? Debt ratio, we want to see the solvency of the company, the leverage level of the company. Is the company is severe to financial losses or not? Is the company able to pay all their debts or not? So this kind of analysis, we will do it through debt ratio. So the fourth analysis is the profitability analysis. Profitability analysis, basically we want to know how much is the earning of the company. So from the total earning that the company have, how much left for their net income. So the most important we want to know is the net income. So not only about the net income, we also want to know from the net income that the company have, how much is contributed to the equity, how much it is able to be contributed to the shareholders. And from the total asset that the company able to generate, basically from the total asset that the company have been invested into the business, how much it able to generate the profit. So this kind of analysis, we will do it through calculating financial ratio. Through profitability ratio. Okay, so we want to know the earnings of the company, the ability of the company to earn money. So that is the fourth analysis. And the last analysis is related to the earning, which is the market ratio. So from the profitability analysis, we want to see where is the company compared to the market. All right. So we continue again after this. Thank you, everyone.